The United States government wants to lend your business money, up to $5 million, at some of the lowest interest rates available anywhere in the country. And most small business owners either do not know this exists, or assume they could never qualify. Both of those assumptions are wrong. And today I am going to show you exactly what an SBA loan is, who actually qualifies in 2026, and the specific mistakes that get applications rejected even when everything else looks right. If you have ever thought about expanding your business, hiring more staff, opening a second location, buying equipment, what I am about to show you could be the most important thing you watch this year. Stay with me. Meet Daniel. He has been running a restaurant in Texas for 6 years. Packed every Friday and Saturday night. A waitlist on weekends. He knew it was time to open a second location. He needed $250,000. His traditional bank quoted him an interest rate that would have eaten his profits before the second location even opened. Online lenders wanted even more. He was ready to give up on the expansion entirely. Then his accountant mentioned something he had never seriously considered. An SBA loan. $250,000. 6.5% interest rate. 30-year repayment term. His second location opened 4 months later. Same restaurant. Same owner. Same financial situation. Just the right loan program, one he almost never found out about. So what exactly is an SBA loan, and why does the government offer it? I want to explain this in a way nobody else does. Because once you understand how this actually works, you will understand why the rates are so low and why qualifying is more achievable than most people think. SBA stands for the Small Business Administration. It is a U.S. government agency whose entire purpose is to support and grow American small businesses. It has been doing this since 1953. Here is the part most people misunderstand. The SBA does not actually lend you money directly. Instead, it guarantees a significant portion of your loan to the bank. Meaning if you default, the government pays the bank back a large percentage of what they lost. Because the bank is taking significantly less risk, they can offer you a dramatically lower interest rate than a conventional business loan. The government's guarantee is what makes SBA loans the most affordable business financing in America. There are 3 main SBA loan programs you need to know about. Each one serves a different purpose and has different qualification requirements. Knowing which one fits your situation is the difference between a quick approval and a confusing rejection. The SBA 7(a) loan, the most popular program. Loans up to $5 million. Used for working capital, equipment, real estate, business acquisition, and debt refinancing. This is the program Daniel used for his restaurant expansion. The SBA 504 loan, specifically designed for major fixed assets. Commercial real estate, large equipment purchases. Loans up to $5.5 million. Interest rates are typically even lower than 7(a), because the asset itself provides security. The SBA Microloan, up to $50,000. Specifically designed for newer and smaller businesses that cannot qualify for larger programs. This is the entry point for businesses just starting to build their financial history. Much easier to qualify for than the 7(a) or 504. Now let us get to the part everyone actually wants to know. Who genuinely qualifies for an SBA loan in 2026? Because the answer is probably different from what you have assumed. Requirement 1. Your business must be a for-profit business operating in the United States. Nonprofits do not qualify. Businesses operating primarily outside the U.S. do not qualify. Every other type of legitimate U.S. business almost certainly does. Requirement 2. Your business must meet SBA size standards. For most industries this means under 500 employees or under $7.5 million in annual revenue. If you are watching this video, you almost certainly qualify on size. SBA loans are specifically designed for businesses exactly like yours. Requirement 3. A personal credit score of 650 or above for most SBA programs. The SBA Microloan is more flexible. Some programs accept scores as low as 600. If your score is below 650, do not write off SBA loans entirely. The microloan program may still be accessible to you. Requirement 4. You must have invested your own money into the business. The SBA calls this having skin in the game. They want to see that you have personal financial commitment to the business, not just asking for government-backed money with zero personal investment. Requirement 5. This is the one most people do not expect. You must demonstrate that you could not get financing elsewhere on reasonable terms. This is why banks rejected you actually helps your SBA application. It proves you need the program. Now, before you think meeting these 5 requirements guarantees your approval, there are 3 specific mistakes that get SBA applications rejected even when applicants meet every single requirement. And mistake number 2 is the one that surprises people most. Mistake number 1, incomplete documentation. SBA loans require more paperwork than almost any other loan type. Business tax returns for 3 years. Personal tax returns for 3 years. Business financial statements. Business plan. Lease agreements. Existing loan documents. Missing even one item delays your entire application, sometimes for months. Mistake number 2, and this is the one that surprises everyone. Not all banks offer SBA loans. And among those that do, not all are SBA preferred lenders. An SBA preferred lender has pre-approval authority, meaning they can approve your loan without sending it back to the SBA for review. This cuts weeks or even months off your approval timeline. Always apply through an SBA preferred lender. Here is exactly how to find SBA preferred lenders near you. Go to SBA.gov and use the Lender Match tool. Enter your business details and it shows you matched SBA preferred lenders in your area within 2 days. Completely free to use. Mistake number 3, applying with no business credit profile at all. While SBA loans primarily evaluate personal credit, having an established business credit profile with a Paydex score above 70 significantly strengthens your application. It signals to lenders that your business operates as a serious separate entity, not just a personal hobby with a business name. Here is what I want you to understand right now. SBA loans were not created for large corporations. Large corporations have access to capital markets, private equity, and institutional investors. SBA loans were created specifically, deliberately, for businesses exactly like yours. The U.S. government created this program because they know small businesses drive American economic growth. And they want to fund that growth. If you are running a small business in America, you are exactly who this program was designed for. The question is not whether you deserve access to it. The question is whether you are prepared to apply correctly. Remember Daniel. His traditional bank quoted rates that would have killed his expansion before it started. The SBA 7(a) program gave him $250,000 at 6.5%. His second restaurant location is open. Both locations are profitable. This week, go to SBA.gov and use the free Lender Match tool. Enter your business details. Get matched to SBA preferred lenders in your area. It takes just 5 minutes. In the next video I am going to show you something that most business owners get completely backwards, whether to build business credit first or get a business loan first. The answer is not what most people think. And getting it wrong costs you months of progress. If this opened your eyes to something you did not know existed, you know where the subscribe button is. And comment SBA below if you had no idea the government offered loans like this, or comment qualifying if you are going to check your eligibility this week. Drop your business type in the comments too, let us see what kinds of businesses are watching.